Good morning, everyone. Major Tom here. I just wanted to put out a quick video. There's a play that I'm hopping into that I know everyone here trades, and I just wanted to put it out there, why I'm thinking the way I'm thinking, and what I'm looking at, right? So, I put out yesterday that I'm hopping into a Cleveland Cliffs short position, but I'm not going to talk too much on that. I'll just show the spreadsheet that I'm running. Let's take a look at this here, and we'll give it a little bit of magnification. Awesome. Take a look at this. I see GameStop here jumping ahead into the 3 spot today with a price spread of 33.92%. For those of you who don't know how this algorithm pulls data from the overall market and how it comes up with this, what this is basically finding with this list of stocks is it finds EPS discrepancies. So if we take a look at GameStop right now, it says it's 33% deviated. It's basically saying that it's 33% from this yellow fair value line. And we determined that that yellow line is fair value because the price per share at last earnings was about 23.75, and the next earnings date, if you can see down here in TradingView, you see how the earnings dot is projected to go up, so the company is supposed to be more profitable, yet the price is still reflecting a significant loss, 33% below fair value. Whenever we see discrepancies like this, it opens the door for what I like to call EPS deviation plays, and we've been trading these very successfully. So I just wanted to put it out there that GameStop is very highly deviated. If anything, it's probably it is the top three, you know, in the watch list right now. So it's definitely catching my attention, and that's not the only reason why I'm trading it. If you take a look at this setup here, it looks like we have one, two, three call symbols. These call symbols are generated when the implied volatility goes really low, and the RSI dips below 30. So if you take a look at the RSI here, it looks like this right here might have been a good pivot point and probably the lowest low, if we can take a look at that. And then if you take kind of like our entry plan here, this is what we're looking to capture, about 44% to the upside or more, and about 10% to the downside worth of risk. That's kind of like what I'm looking for on this trade. What I really want to see for confirmation of one of these call symbols is I want to see GME break through this red resistance line. This is like a red bearish trailing stop, and a lot of algos use this type of this trailing stop now. So I don't know if you've noticed, but there's, take a look at NVCR. This is a play that we just made as well. And we'll go to the 15. So on NVCR, like we had IV crush here, double top, and then the second it started to break and the cloud turned red right here, we had a confirmation of our bias here, and we entered a pretty massive put position, and then the stock just sold off massively the next day. This was up 70%. I put this in the chat as well, but that's kind of what I've been using to validate my theses. And if you take a look at this on the 15-minute chart, the cloud actually turned green. So we are looking pretty bullish on GameStop right now for a reversal. To the upside, we have about 33% worth of movement. And if you take a look at the short interest on Ortex, it does have a short score now of 94, which is significant. I believe the highest the short score goes is 100, and usually when it gets even close to like 99, like it's almost a guarantee, especially on a stock that's highly traded like GameStop. Some of these other ones are like dead tickers, right? So one of the other big things here is we're still at 100% utilization. The cost to borrow is spiking significantly over the last 3 months. And if we bring this down to 1 month, in 1 month, the cost to borrow has spiked over 100%. So the cost to borrow is going up significantly fast, and it's just getting faster and faster. That's one of the good things that we want to see, one of the catalysts that we want to see when it comes to short squeezes. And the days to cover, it's showing like, let's see. Over the last month, it's gone up 3%. We're looking at roughly 20 days to cover this short position on the entire company. Now, as we all know, Carl Icahn has a pretty significant short position on GameStop. However, there comes a point where the company's stock price has to pivot as long as they're showing good earnings. And I believe going into March, this might be one of the one of the most bullish earnings yet, because they've been showing significant growth to the upside. We see the dot move up, up, up. Sorry, we see the dots move up, up, up over here. Spread this out. And if we were to take a snipping tool and capture the GME earnings, we can see that we can make a very clear trend line to the upside here. And as we get closer and closer to this 0, that means that GameStop is no longer bleeding cash every quarter, and that's what Ryan Cohen is specifically targeting and trying to do. Once GameStop is making a positive cash flow every quarter, the theory that shorts have that they're going to burn through all of their cash and then eventually go bankrupt kind of goes out the window, as long as they can stay above this critical number here and continuously climb and show more growth. Then the short thesis will completely fall apart, and shorts will definitely go underwater on this stock because ETFs will just start buying it, right? So this is one of the biggest pieces of news that I think I've ever seen on the stock. And going into January, there's some other dates that I wanted to inform you of. Here's the FINRA short interest reporting dates. Typically, share prices like to spike around these dates. So what I would do is make sure you capture between January 13th all the way through February 9th is kind of like what I'm looking at here. So if we were to go to a calendar, 13th through Feb 9th. So getting into a call, let's say today or tomorrow, depending on when the next red market is. I always want to buy calls on red markets to make them cheaper for you. If you were an options trader, if you just want to trade shares, go for it. But I always try to look on red days because that way you're going to get the best price for the delta. Also, usually the IV is pretty low when the stock's going down very, very slowly. So we're looking at getting in probably either today or tomorrow based on market conditions. And I want to buy a call that extends out past, it looks like February 9th. So I'll try and target February 10th or 17th expiration, and or maybe I'll just even capture the earnings report, which is March 22nd. That way I buy myself an extra 1 or 2 FINRA reporting cycles, and I get to capture the earnings. If they release something really bullish, then they go above 0, and that would be their first positive earnings. You could see a massive, massive spike in share price. So be on the lookout for that. All right. I hope all of you are having a wonderful day. Thanks for tuning into my channel. I know I don't post a whole lot, but when I do post, I try to make it as informative and quick and to the point as possible. All right. Happy New Year, everyone. Happy 2023. Good luck trading. See ya.